Good morning, everyone, and welcome to the European crossover webinar. And let's take a look here. We've got the cable under a little bit of pressure, not too much, but into a little bit of support area here, right here in this 30.85. We've seen quite the turnaround here in the Dalian, and one of the thoughts I have was I've got a short on is that because we'd cleaned out so much down here that we might start to push higher. I mean, not significantly higher, but a good push higher. And we're seeing that, but that may be a bit aided and abetted from the S&Ps. We've seen them already go up to 32.74. We'll have to see what we do up here. I mean, we're just above that pivot area here in the Dalian, and we'll take a little bit closer look. And the euro has made it down here to 11.06, still holding up relatively well. I mean, the low's been 11.02, and we're still holding up okay. I think that the market's going to be a little bit on hold until we get past NFP, and I still think that the euro will be able to go on at that time, start to turn around. But obviously, there was some saw where they posted that. I think it's January 15th is the signing for that phase one deal. I don't know I forgot what it said at the time was going to be, but that it was definitively was going to be January 15th, and things have quieted down with the whole thing with Iran, so everything's looking sprightly for the S&Ps or the equities to continue their run, and we've seen things come off, so certainly open the door for Dalian to probably move a little bit higher, and then we'll see what we do after that. But we've seen the dollar index come here, and we actually have a resistance. I think it's well, I'll look at the analysis I did, but I think it's actually 97.40 or 42. So with that, let's go on and move into the data. Unemployment rate came out. Italian unemployment rate came in at Reuters post 9.8%, came in at 9.7, so a little bit lower. Eurozone unemployment rate is going to be out at the top of this next hour. Let's see, bear with me. Consumer sentiment index. That'll be at 6 a.m. Eastern for Germany, France, the UK, Italy, Spain. And then at 7 a.m. Eastern, we will have Mexican inflation. Canadian housing starts, as well as weekly initial jobless claims. Let's go move this out of the way. Probably the market's going to take a little bit of a rest today, I guess, ahead of NFP. And we saw that big move or big jump in ADP. So that's certainly given a rise to expecting, a good NFP, and probably going to keep the dollar yen on the bid for then. At that point, maybe they'll be able to go and see things start to ease back a bit. So I think as the dollar yen quite often sometimes goes, you kind of held there for a few days, and then we start to see things pull back. But I don't think it's going to be the big pullbacks. I mean, I think we already saw that, and we'll get to that because obviously we had happen with the night with the whole missile attack or whatever you want to call it from Iran, and we had a support level, and we'll see it on the daily at 778. We'll take a quick jab on that one moment. And we exceeded that and we got above it. You can see here that's been in place, so we just taken that out. Obviously, it didn't look so easily dispelled at the time when things were just going down, down, down. But you can see here, and then we set ourselves up for quite the turnaround, and we're just pushing it a little bit higher here. But like I said, we'll see if things ease up over the next into this next week. Let's go on and get into the news. We're kind of getting in our bearings there, considering how slow it is today. So hang on. Canadian dollar weakens to an 8-day low as oil prices slide. And obviously, you can see the dollar CAD here still pushing higher. So I thought I'd go on and reference this. The Canadian dollar fell to an 8-day low against its U.S. counterpart on Wednesday as oil prices tumbled on fading alarm over the Iran rocket strike, and the greenback broadly climbed. The weakness in oil prices has been a key contributor. Also, the strength of the U.S. dollar, said Matthew Savory, strategist at BCA. The price of oil, one of Canada's main exports, fell in a wild swing, soaring close to a 4-month high in early trade on an Iranian rocket attack on U.S. forces in Iraq before retreating as Iran and the U.S. quickly ratcheted back tensions. Some recent domestic economic indicators have also weighed on the Canadian dollar. Official data on Tuesday showed the Canada's exports and imports both declined in November. Canada's unemployment report for December is due on Friday. In November, the economy shed about 71,000 jobs. Bank of Canada's Stephen Poloz is due to speak on Thursday, which would give investors clues on the interest rate outlook. The central bank left its benchmark interest rate unchanged on hold at 1.75 in 2009 when the loonie was the top performing G10 currency. Canada is more dependent than some other countries such as the U.S. on trade, so the loonie could benefit from the recent signs of a global economic recovery and easing of trade tensions between the U.S. and China. Ultimately, we're in an environment that is cyclically likely to turn very favorable for the Canadian dollar. And the Aussie and New Zealand dollars find only muted relief in the Mid-East peace. Aussie and New Zealand dollars traded on Thursday after a run of losing sessions and an easing in tensions in the Middle East. The Aussie inched up to 68.72. We hit that key 68.48 yesterday. I was noting in the chat when we got there, and it held. Basically, I think it was right to the pip. And on Wednesdays, and actually that was a level that we were looking at from the early week analysis that potentially it could get to. But anyway, that wasn't far from it given the broad selection in risk aversion. It also lapsed below its 200-day moving average. Both had suffered on Wednesday from Iran launch missiles at the U.S. bases in Iraq, but the mood lightened when Trump suggested Iran was standing down and stopped short of military retaliations. Investors reacted by paying back wagers on cuts in interest rates by the RBA. Futures implied a 44% chance of a quarter-point easing to 0.5% in February, down from 60% at the height of the crisis. Markets have been nearing the odds of a cut recently as bushfires scorched large chunks of the country and threatened to undermine consumer spending. The size, intensity, and duration of the current Australian bushfires mean that they will almost certainly have a larger impact economically than the past fires. This might be a case for monetary policy response if the fires trigger ongoing national effects, such as sustained loss of consumer confidence. And that has been a key of the weakening in the consumer confidence in overall consumer attitudes. As it happens, we're already focusing or forecasting a 25 basis point February rate cut. And like I said, since it's slow this morning, we're kind of just hitting the news and kind of tying things up, especially after the wild bit of excitement over the last few days. So it kind of pulls everything together. Eurozone bond yields at 1-week highs as the U.S.-Iran fears abate. Government borrowing costs rose across the Eurozone to 1-week highs on Thursday, reflecting easing tensions between the U.S. and Iran. Trump on Wednesday tempered days of angry rhetoric and suggested Iran was standing down after it's fired missiles at U.S. forces in Iraq over the crisis of a U.S. killing of an Iranian general. High-rated Eurozone bonds, like the German Bund, considered a refuge during times of uncertainty, have benefited in recent days. But bonds were already starting to give up their gains in price on Wednesday, pushing yields higher. And an early trade 10-year bond yields across the euro area rose to one-week highs. While Trump seems to be trying to somewhat diffuse the situation, we would remain cautious for the time being, said Peter McCallum. Yet, unless anything tangible takes place, there's a risk that this saga fails to be the back of the market's mind, and the onslaught of supply takes more on the effect of rates. And I think we saw the largest bond issuance, I think it was in quite some time, which may have been part of the case for the euro being under such pressure or ongoing. It says Payne also holds a bond auction, which could be a test of investors' appetite after socialist leader Pedro Sanchez won parliamentary backing on Tuesday for Spain's first coalition government in decades. And we are seeing the cable come off a little bit here. Right there. Oh. And lastly, we'll finish up. Safe haven currencies get back as gains as U.S. and Iran situation eases. Safe haven currencies such as the Japanese yen retreated on Thursday as the U.S. and Iran backed away from further conflict. Move on down. Markets are brushing aside fears of major escalations of the U.S.-Iranian conflict. Greenback was down 1% versus the euro as it traded 111. Well, I don't know why they said it's down, because that's the opposite, because the euro is the one that's down. Traders focused expected to shift back to the global economy with expectations that the U.S. and China will sign a trade deal next week, providing underlying support for the risk assets. Investors think the deal will clear one of the world's largest economies' big uncertainties and help boost global growth. Moreover, Chinese factory gate prices fell at a slower pace in December, giving Beijing more room to stay on course for monetary easing as economy growth cools. Some investors are worried that the consumer inflation hovering near 8-year highs could make China's central bank more cautious about further stimulus. A trade deal, falling inflation, combined with the past and current PBOC easing, should, over the next few months, help the Chinese economy, said Sebastian Gailey. Traders will also be watching the Eurozone November unemployment rates, expected to stay at 7.5%, and the U.S. jobless claims, which economists polled by Reuters expect to have inched down to 220,000. With that, we'll go on and move into the analysis. So since the euro closed the second consecutive day below 1170, and I meant to say, go put it in here. Would be nice to put on the euro. Hang on. There we go. So the euro closed a second consecutive day below 1170. The pair also lost 1130, opening to move to 1105, which we got that now. So we were, like I said, I do the analysis over that's what it's called, the Asian session update. But I was looking for a move to 1105 with the potential to 1078. Obviously, I think that would happen on NFP day with a strong number. Confluence with the upside trend line. The surprisingly strong ADP played its role in keeping the euro under pressure into NFP. Resistance is now 1148. So we're looking for a move down here to 1105. We did go on and get that, but here we've got this uptrend line. That's going to come into effect or play right into this 1078. By the time we get there, that's where we're going to be here for tomorrow. Potentially, we could go in and get down there. But I still think that after that, we can probably see the dollar start to ease back, euro start to come back. We are seeing higher Eurozone yields, so I think that should be beneficial. That being said, we are back below 1170. I mean, we lost it, we gained it, we lost it again. and then the second consecutive day below it, and also getting below 1130. I think a lot of that, not a lot of it, but some of it certainly had to do with the strong ADP that we got. And I think that's keeping that pressure, because now they're looking for, I think most of the banks initially were looking for like 166,000 for NFP, and they might get surprised a little bit higher than that. So henceforth, we have the euro back under some pressure. Quite the turnaround, you think about it. Once again, putting things in context, I mean, remember, we were just right here at this 1232 and trying to push higher and look like, you know, hey, buy any dips, and boy, this thing has really come off. But before I think we get all too excited, we've seen this where it looks like it's going to break down, then it comes back. Looks like it's going to break down, it comes back. So I'm kind of along that ilk, but I think we're going to have to just be patient on that. So once again, we had for 1105, we've already got to 1105. So I think we have to look ahead as to what we've got at risk, and that would put us at 1078. I don't think we're going to get there today, but that would be the risk level going into tomorrow. It's still going to be in the range only because we're still above this trend line. Got to give it the benefit of the doubt. On the upside, we're looking at 1148. Let's go and move on to the cable. So cable finished the session a bit weaker in a relatively tight range. Support for Thursday comes in at 30.50, followed by 30.05 with resistance at 31.66. So here we are, 30.50. It clears a bell here. We're still been trading in a relatively tight range, and beyond 30.50 is going to be 30.05. I don't want to say yesterday's range was so tight, but it was tight overall. Well, as tight as that was, today's even more tight. So I'm going to go on and stay right here with this 30.50, not changing it. Unlike, let's say, with the euro, we were looking for a move to 30 for 11.05, but not that far away from that, even though we did touch that or go dip below it and just back above it. So we have gone open this for potentially to move lower, and what we'd be looking for, at least from here, risk into NFP, the euro 1078. I'm not going to do that with the cable. I think this 30.50 will be, I don't want to say it's just fine, but we're going to leave it for there. Looking ahead, let's go on in, not ahead, but let's take a look at a 2-hour chart here on the cable, where we may see resistance. Right there. 31.21. Let's go move into the Aussie dollar. So the Aussie held the key 68.48 level, remaining above the broken trend line. A daily close below 68.48 will open a move to 68.07. You see that there. Right there. But more importantly, would place the pair below the trend line. So you'd be looking at basically a failed breakout. Resistance will be 68.84, followed by 69.14. So you can see here and boy, did we come up, but we've made it right down here, this key level here at 68.48. had a real tight range. Today we're under a little bit of pressure. See how this plays out. Obviously, Australia's got a lot of issues, not only with consumer spending, obviously with the basically disaster, national disaster, which is the Australian bushfires, certainly keeping the pressure and had increased the potential likelihood of an RBA rate cut for next month. And I think we will see that. And that's kept it under pressure. Key is going to be, I mean, here we are at 68.48. So at least for now, we're going to want to keep that there. We had it since yesterday, 68.48. On the upside, though, we've ratcheted that down to 68.84. We're giving this a benefit of the doubt because it is above the trend line, but it certainly doesn't look bullish. It just doesn't. I don't want to say it's bearish because, once again, we are still above this trend line. If we break below, and as I said, if we get a daily close below 68.48, well, you've just slid right back below the trend line. And that is not good. That'd be just an outright failure there. So the Kiwi closed with a medium-legged doji. You can see it here. And I think there is a name for that. I mean, like, and usually medium-legged doji is a little bit longer. You know, we have the long-legged doji. I forgot what the name of this. I think it might be called a harami. But anyway, that nonetheless, very tight range, finished basically in the middle. But anyway, suggesting the market is consolidating, working off the overbought run. The pair will find willing buyers at 66 even, with initial resistance at 66.91. So we're going to go with the support here for 66. And I think you'll see some decent demand there. And 66.91, that stays the same, remains bullish. So the dollar CAD continued its mild recovery. Resistance ahead is a 30.56 to 68 zone, and we'll detail that right there. Show you. There's 30.56. You see right here and to here. Doggone it, anyway. I think I was looking on the 2-hour chart here also. But there's a 30.56, and I had 30.68. Right there. You see here? So between 30.56 to 30, there, right there is this ridge. You see here, let's go on and highlight it. There we go. Okay, there you go. So it was 30.69, but I had 68, but it's not going to make that one pip ain't going to make any difference. Let's go and just. So that zone, there's 30.68 right there, 2-hour, and on the daily. You see right there? 30.56. So it got a little bit of a zone there. And actually, here's the 68. There we go. That's where I got it. See right here? 56. 68. So we got that little zone here. Well, let's see here. We'll give it a little extra stretch. But it's a zone there, 56 to 68. Still remains bearish. A close above that would allow a move to 31.12. Support's going to be at 29.95. And on to the dollar peso. So the dollar peso remains under strong bearish pressure, evidenced by each rally vigorously sold into. The pair appears destined to 1865, which confluences with 1862, the 161% of this most recent rally, failed rally. And I think we've shown that before, but we'll do it again. There you go. You see that right there? So there it is. That's 161% of this failed rally. Obviously, we came up, we turned around, came right below it. So I think we're going down to that 1862, confluence with 1865. We'll move this over here. There we go. Confluence with 1865. That's where I think we're going. So, We've already been to 1875. A little bit here, right there, you see here at 1870. Right there. We'll go with that, 1870. Still think we're getting down there at 1865, but there's some support here at 1870. Resistance is going to be 1888. With that, let's go move into the Dalian. The Dalian launched an impressive rebound after reaching and slightly exceeding support at 778. Resistance is a pivot of 927, a daily close above 964, and you'll see that here. Right there. A daily close above 964 allows an immediate move to 1007. Support is 886, followed by 858. We're still holding pretty steady here. But like I said, and it's been a very nice rebound. After, we tagged and even took out the 778. It's the level we had there from before. It wasn't something that's new over the last, even this week. It's been in place for a little while, coming across all these touches. It's a very nice rebound, and we're still holding up well. But if you think about where the S&Ps are, holy smokes, we should probably be, realistically, I mean, even overall, we should be well above actually 113 to 114, actually at least around 113. But on this recent move here, we should realistically be probably around 1050, almost 11. So that's what I'm saying. It's still a rather restrained move, but still it's come back here. So we may kind of hold here while the S&Ps may remain bid until they get the phase one deal, baloney stuff. I mean, it hasn't been that big of a deal, this what they did and why they called it phase one. But I think it's more the administration's play than really so much as China's. But anyway, that being said, we even in the context of the more restrained move we've had over the last it's almost going to be 3 months. Still, we should probably be even higher. And so it's still, even though the firm, it still hasn't pushed a whole heck of a lot higher. So on the upside, it's going to be 964, and that's going to be key on a daily close. It's not bearish after this turnaround. Let's call it range, because we see the overall picture. We're just back where we were before. And support, the first key support is 886, but for right now, as of today, it's going to be 902. Let's go move into the cash dollar index. So the dollar index rebounded, closing short of key resistance 97.42. A daily close above 97.42 negates the downside pull and lows for the market, and allows for the market to re-challenge 97.89. Support would be 96.80. So we're right here. It's actually going to be a little bit higher. To be quite honest with you, let's take a look here. Right there. It's not that much higher, right? See, right there. And that is the 97.42. So yeah, I did have that right. 97.42. So for right now, it's going to be 97.42. It's still bearish. I gotta say it's still bearish because we broke back below this 97.89. But as I said, if we get a daily close above 97.42, that's going to negate the bearish outlook. Doesn't turn it bullish, but it would negate the bearish outlook. Looks like we have a little bit of a trend line coming here. Let's take a look at that. I like to go from the body closes as opposed to the extremes here. But let's take a look. See right there. Support. Let's take a look at the 2 hour. Right there, 97.14. That does seem a little bit stretched here, so that's right there. 97.08. With that, let's go into the cross rates. Well, with all these yen pairs, we've had a nice healthy rebound. We've actually got resistance coming in right there where we're at. We did get a little bit above it, but right there, which is 72.57. Nice rebound here. You can even look at fibs. Go and put a 2 hour, but I don't think that's as important at this point. Yes, and yet I think you got to let things play themselves out after that good strong rebound. So we're right there at the 61%. Intraday support, you saw it right there, 72.40, but I think that's a little bit close. It's going to be right there. So got short, be looking for 72. Let's go 72.31. Let's go move into the Euro Yen. Same thing, nice healthy rebound. We're right here at resistance, 21.53. Very nice rebound. Also, as with all the yen pairs, let's see, support's going to be right there. It's pretty clear. 20.92. 20.92. So if we do get that pullback, that's what you're looking for. 20.92. Well, the euro odd looked like it was flying, but it's kind of had a bit of a pullback here. Support. Let's go and take a look on the intraday. You can see all the demand coming in right there. And you can even push it a little bit lower. 61.47. We're going to go with that, 61.47. With resistance, you can see that. That's pretty clear coming across here. You see right there, the reaction low right there. And we meet that. Look what we run out of gas on a closing basis right there. Pretty clear, 62.20. Now let's go with the Euro Kiwi. Well, the way the Kiwi's trading, and it's still strong, but just taking a pause. I think that's where we're at right now on this one also. So we go with support right coming across this high, which is going to be 66.77. The same thing. I think we're just consolidating here. We'll give the euro, like I said, in and of itself the benefit of the doubt. So it's going to be right there for resistance. 68.42. And let's go into the Aussie Yen. Well, we did get that dip below the trend line, and then we recovered, which is very good. Resist support is going to be right there. That's pretty clear there. Right there, the close and the open, right there. It's going to be 74.48, about 50 pips lower. We're just toying around that 50% area. It's going to be right there, 75.32. I should push it just a little bit higher. There's a 32, but the real resistance comes in at 75.40. $75.42. Resistance. It's clear it's 41.38. Just not sure if we could even make it that there, but it is there. 43.81 here on the guppy. You can see the demand coming in right there. So it's going to be 42.48. 42.48. Still doesn't mean we can't push a little bit lower. I just don't know if it'd come all the way down there to 25. We'll split the difference, call it 42.37. But really, that's going to be a good demand area here. All in here between 50, I'd say from 54, obviously down to 32. We'll split the difference and call it 42. We're going to go 42.39. But we are dropping back here. We just about made it here to the 161%. We just about did, almost. Not too far away. Right off of this tip here, we're gonna, you see that going across? We're gonna go right there for resistance, which is gonna be 91.26. It's, I'm not sure I had it there because it's still bullish. And when we broke above here, demand would be just a little bit lower. Let's see, they press it here. It's still going to be a buy right here to 88.47. That's still a ways off. We're going to go back until we get there, 89.20. Still a pretty decent fall back. Let's see. Well, at least you know what the risk on that would be, 89.20. A bit of a stretch. There we have it. We're still seeing the SPOOs still holding up relatively well. Obviously, a bit of an understatement. I'm just saying, my point is that it's holding up this bid very well. Henceforth, we're seeing Dalian continue to, yen pairs continue to firm up. Gold has had a pretty nice little pair back. So we're just below the 38%. My guess is we'll still make it down to the 50%, which is 1530. You see it right there, 1529.70, before people can feel more comfortable stepping in, because boy, you got some people under some kind of pressure here. Not to mention, demand right there, 1540. Right there. 1539. So we just about made it there. Off by maybe a couple of dollars. And boy, look at this move here in crude. Yeah, just about made it there. Right there. Actually, it did. These touches coming across here. They hold steady for a couple of days. And that's what we have for today. Look at that. We're pressing up against that resistance here on the cash dollar index, with euro right here at 1105. Cable has, well, we even took out the 3050. Look at that. And Dalian on its highs at 938. All right, thanks for joining us here on the European crossover webinar.